Let's talk about oil. What's up, investors, and welcome back to another video. If you're new to Recon Africa, they are on the OTC ticker RECAF or RECO on the TSX Venture Exchange. This is a company that I first covered on the channel last year, but they are about to start releasing good news again, and I expect to see a lot of progress. In this video, I will explain how this company managed to make a loss of $260 million in their recent earnings report and what you need to watch out for when analyzing companies. A lot of you have requested this video over the past few weeks, so before we get into it, if you like this content, can I ask you to smash the like button? It literally costs you nothing, but it helps me out so much. Small channels like this only grow if videos are getting likes and comments, so also drop a comment and let me know what you think of Recon Africa and your price target. It shows me that you want to see more content like this, but it also helps the video get seen by showing the YouTube algorithm that viewers are interested in this type of content. I'm aiming for 300 likes on this video. Let's make it happen. Subscribe to the channel if you're new and hit the bell notification so you never miss a video with the potential to make you money. I want to point out that I'm not a financial advisor and this is not financial advice. Now let's get into it. Who are Recon Africa? Recon Africa is a junior oil and gas company engaged in the exploration and development of oil and gas in northeast Namibia and northwest Botswana, known as the Kavango Basin. I first started talking about this company early last year when this stock was trading at less than $3. It eventually ran up to over $11 last summer, as this is one of the largest remaining oil opportunities left in the world today. The Kavango Basin is one of the largest undeveloped onshore basins globally, and this one company has licensed the entire Kavango Basin in Namibia and Botswana, which is a total of 8.5 million acres. Recon Africa holds 90% interest in a petroleum exploration license in northeast Namibia, which covers an area of 6.3 million acres, and based on commercial success entitles Recon Africa to a 25-year production lease that can be extended up to 35 years. And for now, the Namibian state oil company Namcor holds the remaining 10% interest, but this might be about to change, which I will look at in a moment. Recon Africa also holds 100% interest in petroleum exploration rights in Botswana, that covers an area of 2.2 million acres and entitles Recon Africa to a 25-year production lease over any commercial discovery that is extendable to a 45-year lease. The license agreement in Namibia and Botswana also call for royalties and corporation tax to be paid up to 35%, so this needs to be considered in any investment calculations. Recon Africa acquired a high-resolution magnetic survey of the area and conducted a detailed analysis of the resulting data and other available data, including reprocessing and reinterpretation of all existing geological and geographical data. The survey and analysis confirmed that the Kavango Basin reaches depths of up to 30,000 feet and is anticipated to hold an active petroleum system. The Kavango Basin has multiple play types across multiple prospective target horizons. The first well drilling was completed in April 2021 and the second well drilling was completed in July, with the second phase multi-well drilling program being conducted throughout this year. It is kind of funny that when I started talking about this company last year at only $3, the market cap was just $500 million. Right now the market cap of this company is over $1 billion, but the scale of the opportunity that exists here is massive. And this company still looks cheap, considering that there is potentially hundreds of billions of dollars worth of revenue potential here, which I will look at in a moment, so stick around for that. Obviously there's still taxes and royalties to be paid, but if everything is to work out, then this could be one of the largest remaining undeveloped oil basins in the world. But why are we talking about Recon Africa right now? So let's start with the very latest press release from the company. Recon has extended the letter of intent with its partner Namcor to require half of Namcor's 10% interest in License 73 of the Kavango Basin and will be working towards an agreement to be concluded by June 6th. So this will give Recon Africa an even greater share of the potential that exists here. But earlier in April, Recon Africa updates highlights multiple drill prospects and new play types. The work has initially identified 5 drillable prospects. 6 potential reservoir and 4 potential source rock intervals have been established, and a new play type was established, the Damara Fold Belt. For 2022, Recon Africa plans to initiate a multi-well drilling program beginning with 3 test wells and a sidetrack of the 6-2 well. Importantly, these will be the first wells drilled into seismically defined traps with the objective to prove commerciality of this petroleum system. The company and relevant government authorities are advancing drilling permits with a target to spud the first of 3 wells in Q2 2022. A more definitive schedule for construction and spudding the first well will be provided in the next few weeks. Now, this press release was at the beginning of April, so we can expect to hear news on this any day now. And I expect to see greatly increasing volume in this stock over the coming weeks. And this has already slowly started to happen. Recon's trading volume on Friday was 685,000 shares. This is more than double the average volume for the past 30 days. And Recon was also 10th most active by dollar volume on the OTCQX, being one of only 3 stocks on this entire list having a share price under $10. Guys, if you've watched this far into the video, remember that small channels like this only grow if videos are getting likes and comments. Help me with the YouTube algorithm and comment your price target. Scott Evans, CEO, commented, "As we continue to progress the evaluation and exploration of the Kavango Basin, our work to date has increased our confidence that the Kavango Basin is highly prospective for conventional oil and natural gas. Building on the success of our 2021 program, we are now focused on executing our 2022 seismic acquisition and drilling program. As we begin the second phase of our operations, of what we believe is one of the largest undeveloped onshore basins in the world. It's very important to understand the size and scale of this project. The Kavango Basin that Recon Africa has the rights to is 8.5 million acres and has a production potential of billions of barrels and potential for hundreds of billions of revenue, given the oil prices, insanely high prices right now and predicted to go higher. So let's look at the Recon Africa financial statements that were released just a few days ago. This is the full year 2021 audited financial report. Looking at the balance sheet, we can see that they have $61 million in cash and total assets of $133 million. They have total liabilities of $48 million, giving an asset to liability ratio of nearly 3-to-1, which is very healthy. Which is a very healthy looking balance sheet and total shareholder equity of just over $85 million. However, looking at the income statement, things get a little bit trickier. The first thing that stands out here is a whopping loss of over $250 million for 2021. Yes, you heard that correctly. This company has recorded a net comprehensive loss of over $263 million for the full year 2021. So we can see here that they have income of $10 million, and we will look at note 5 in a moment to see where this income has actually come from. And then further down we can see the settlement of option agreement of $110 million and an impairment of $105 million. Again, both of these are explained in note 5, so let's take a look at this. So note 5 is the details around the company's acquisition of Reconnaissance Oil Corp in 2021. Reconnaissance Oil Corp had the right to acquire a 50% working interest in the Botswana license, which Recon Africa felt was potentially valuable to the company, and therefore by completing this arrangement, Recon Africa regained full operational control and now hold the full rights to over 2.2 million acres. To complete this transaction, Recon Africa issued 17.5 million shares valued at $189 million due to the share price of the companies at this time. A value of $105 million was attributed to goodwill, representing the difference between the consideration for the acquisition and the net liabilities that were assumed. Now, this next bit is something that I hate to see. If you follow this channel, and I think I've actually mentioned this in every video I have done over the past 2 weeks, I hate to see goodwill being recorded as a major part of a company's assets. Goodwill is not a tangible asset. In effect, it's not real. It can be written down, it can be impaired, it can disappear with the stroke of a pen. And this is exactly what has happened here at Recon. Immediately following the closing of the arrangement, the company identified an impairment indicator which was the net liability position of the Mexican CGU. Therefore, management calculated the recoverable amount of the CGU, which was based on the fair value less costs of disposal, resulting in recognizing an impairment on the full balance of goodwill in the consolidated statements of profit and loss. So I just want to flick back to another video that I did over the weekend, where I looked at RECAF Stock, where I spoke about removing goodwill from my calculations when analysing a company's financials. The opposite of a bargain purchase, where an asset is bought for below its fair value, the difference must be recorded somewhere. The same goes when an asset is purchased for above its fair value. In this case, the difference is goodwill and gets recorded in the non-current assets. My problem with goodwill is that it is not tangible, it is not real. This $147 million could simply be written down as an impairment in the very next earnings report. So I tend to remove goodwill from my calculations when analysing companies. This would leave total assets of $230 million. What I have described in this video is exactly what has happened here at Recon Africa. This is why I hate to see goodwill and why I don't consider it to be a real asset. And that is, on paper at least, how Recon Africa has managed to lose $263 million in 2021. Looking at the charts over the past 7 or 8 months, we can see that this stock has been moving in this channel consistently between $4.50 and $6. Apart from this crazy dip in October, anytime the share price has dropped, it has found a level of support at $4.50. But remember, for a lot of this time there was no drilling happening and the trading volume has been very low. However, we are expecting to see a lot of news over the coming weeks and I expect to see a lot more trading volume. Provided we see good test results, there could be significant gains here, and when we look closer at the past month, we can see that we are very much in an upward trend right now. But everyone needs to be aware that investing in oil stocks is very risky. Just look at 88 Energy. Last month, for example, results were not as expected and the stock tanked. I don't expect that to happen here, but I didn't expect it to happen there either. People need to be aware that this does happen in this industry. So guys, this video is for entertainment purposes and none of this should be taken as financial advice. But on that note, what do you think of Recon Africa right now? Are you buying, holding or selling? Drop a comment and let me know what you're doing and what price targets you have. I would greatly appreciate if you could smash the like button, hit the subscribe button if you're new, or follow me on Twitter and I'll catch you in the next update.